Welcome to another exciting episode of The Trading Bell. This week on the show, we shall be speaking to Geoffrey Odundo, who is the Chief Executive Officer of the Nairobi Securities Exchange. He'll be talking to us about what the year portends and how has trading been since January up to now, even as we close the month of February. Well, just before we get into the interview, let's take a look at his profile.
Geoffrey Odundo is the Chief Executive of the Nairobi Securities Exchange PLC. Mr. Odundo, an accomplished investment banker, has been in the financial services sector for the last 26 years, 20 of which have been in the capital markets in various senior roles in asset management, corporate finance and securities trading. He is currently a director of the Central Depository and Settlement Corporation Limited, director of the NSE Clear Limited and a trustee of the NSE Fidelity Funds. He is a member of the Central Bank and Consolidative Forum for Domestic Debt Market and a council member of the Institute of Certified Investment Financial Analysts. Mr. Odundo is also a director of the Association of the Stock Exchanges of Africa and is a member of the Thomson Reuters Africa Customer Advisory Network. He holds a master's degree in strategic management and an undergraduate degree in mathematics and economics. He is also an advanced management program graduate from Strathmore Business School.
Thank you so much, Jeff.
Pleasure, Abby.
A pleasure to have you on the show as always, and it's been a very interesting year. We've seen a number of key policy shifts from the government, from the rate cap being repealed to right now we are seeing a lot of issues happening when it comes to the markets. But from where you sit, how is 2020 so far building up, especially coming out of a difficult 2019?
Oh, thank you, Abby. So I must say that we've had a fair start to 2020. As you may recall, 2019 was quite a challenging year despite our optimistic view of it. And so turning into 2020, we sort of saw an uplift riding on the recovery of the banking stocks in the last quarter of 2019.
Sure. The
repeal of the interest rate caps had a positive impact on the financial stocks, as you may expect, and that sort of trend has continued. We've also had fairly stable trading on our key leading counters in the telecom sector, for instance. The flow from foreign investors has still averaged at about 60 to 70%. There's been some level of local institutional participation as a few fund managers take profits. And there's a general market stability. Even if you look at the performance of the index, we haven't lost too much ground. It's more or less just the early start of the year. So sure. I must say that it's been a fair start. We do look forward to seeing more activity, especially in this first quarter. As you know, it's a reporting quarter for most institutions, especially banks.
Yeah.
So between now and end of March, I could like to say there'll be a little more volume coming through the market. And so as anyone would expect, I'm fairly optimistic that we'll have a fairly good close for the first quarter of the year.
All right, some good sentiments as you put it. So Jeff, looking at how the market activity has been building up, from your observations, how is the local investor participation compared to the foreign investors? Yeah,
so first of all is to say that we are an international market. If you looked at there was a recent report about the performance of African markets, and we merged tops.
Yeah, I saw that.
Despite a challenging 2019. And so foreign investor participation still remains our key investment pool coming to the exchange. However, we are very aggressively looking to really get more activity from the retail and the local institutional clients, because for a market to function well, there has to be a diverse pool of investors, so that if there's an issue affecting the international flow, then the local flow complements or covers that position. And what's been challenging for us has been a weak domestic demand side, especially the retail. So we've put in place a number of programs to support retail activity, for instance. We're currently working on a platform that will encourage or will aggregate retail investors to come through the NSE app upon which they will be able to see all other apps. And so that using that link, they'll be able to access whichever broker they want to trade with. We are doing one-on-one roadshows to talk to investment managers, to talk to trustees of pension schemes, to talk life insurance companies, to just encourage them to look at the market a bit more positively and look at it from the valuations that are there. Currently, we are trading below a price to earning multiple of 10 and makes our market extremely attractive if you look at other markets. We're also looking at converting some of our increasing our listing program, making it a bit more active. We currently have 24 companies on Ibuka, and we want to get those converted into fairly good listings. A lot to do with also large corporate listings, and even talking to the government on a state enterprise listing to come to the market. So what's really going to activate the market is getting the strong domestic demand back to life, because the international demand is doing its part. But the exit or the activity on the domestic side is quite a challenge, and we really have to work hard on that. All
right. And speaking about the listings, Jeff, what has been your experience when it comes to talking with the state-owned organizations? We've seen the National Treasury showing a lot of interest in that line, and perhaps some say they are dragging their feet. Are we ready to, of course, bring in some of these state companies to the market?
So in 2020, we've sat down together with the regulator, the Capital Markets Authority, and really tried to see what do we need to do together to make this or to encourage listings into the market. I must appreciate the new initiative and strong intervention from the Capital Markets Authority to really work closely with industry and ourselves to see how to activate the listing program. Now, we have to have a value proposition, especially to the national government, that the markets do provide an avenue for capital raising. So in that proposition, we must show that there is ability to raise adequate capital to finance government programs, at the same time to allow government to continue having influence on the organizations that they intend to list. And that's really the case we're trying to make. I think we've met the National Treasury, and also the Capital Markets Authority has met the National Treasury, and we are really working very well as partners to really show government that there's an opportunity for capital raising on the market. And there is demand for good state corporations that come to the market. So there's a lot of engagement that's taking place at multiple levels. On the corporate side, we are talking to all the large corporates, medium corporates, and even SMEs to look at the market as a capital raising platform. As you grow your balance sheet, as you grow your business, you need a funding mix. You can't rely on debt alone. You need a bit of equity. It's not just about capital raising alone. It's about building your brand. It's about strengthening your corporate governance. And there are other auxiliary benefits that are really being looked at positively by customers and other stakeholders. So it's about engagement and really building a case that other than debt, there's actually even debt in the capital markets. So explore. And so that's the case we're making to the large corporates and medium-sized corporates. To the SMEs and companies that want to come to the market for the very first time without really getting a lot of interrogation as such, there's Ibuka, which is an incubation platform. And so this is where we're seeing massive interest. To date, 24 companies and possibly another 8 are looking at coming on a hosted basis. And so that's an area that we are working on. So I must say, this year, we're really looking at getting the market very, very active and getting companies to come through. Hopefully, we'll get more rights issues, more sell downs, as companies look at the market to raise additional capital to fund operations. So it's a very aggressive program. We have committees, we have working teams between the NSE, the CDSC, and the NSE and the CMA at the moment. And we'll co-opt other partners into the whole framework so that we can make the listing program a success this year.
All right. Looking at the listings we have so far, we are looking at about 65 companies. On Ibuka, 28 plus the others that you've mentioned, it comes to about 36. Is there a specific target perhaps for this year from your end?
Yes, we have a target. We have KPIs given to me and given to my team as well. We want to be a bit, without putting numbers to putting the numbers, because we also don't want to really, these are very confidential matters that have to be addressed. I must say we are determined to get a big listing, a main listing this year, and a couple of gem listings as well.
Okay.
So we are looking really, really aggressively on that. So I must say that it's been a long drought, certainly a long drought on getting a primary listing, but this year we should do it.
All right.
This is KTN News.